Hey everyone, it's Nagpal from Remax Hallmark, and I just wanted to reach out with my comments and thoughts about TD Economics webcast that I attended yesterday about the economy and more specifically about the housing market. So what I wanted to kind of start with is to remind everyone that this is a government mandated shutdown due to health reasons. This is not caused by an economic meltdown or a meltdown in the markets, or there was fundamentally something wrong with the markets. This is something that was mandated by the government because to deal with a medical emergency or medical situation that the whole world is facing. So as things do get better, as we begin to get this under control, as our infrastructure is able to keep up with the rate of infection and the number of hospitalizations, the economy will slowly begin to open up. And we don't know what the normal will look like on the other side, but I do believe that we do have an end in sight at this point, and that we will slowly now start making progress towards it. So I'm sharing my screen with you. These are some of the slides, some of the screenshots that I took yesterday. So the image quality isn't great, but I wanted to share this with you. So here you can see what the plans for different provinces are, but for Ontario, non-essential services with retail entrances has been opened, curbside pickup, and we will slowly begin to kind of get back to normal. That's my firm belief. That we have started our journey towards the new normalization of economy. This is a really interesting chart. The way TD has explained is some industries are going to have an L-shaped recovery, meaning they've dropped and now they will kind of very slowly recover. And those are things like travel and tourism and things like that. The majority of the GDP, for output comes from the U level of industries, which is mining, quarrying, and you'll see fire. That's finance, insurance, and real estate. So 62% of recovery is expected to be a V-shaped recovery, and that's the U-shaped recovery, and that's the dotted line that you see here. And then the V-shaped recovery really hasn't been impacted a whole lot. Again, manufacturing, telecom, internet, public administration and education, it's going to have a dip, and then it's going to come right back up with the new measures in place. More specifically to housing, of course, population growth is one of the big criteria and a concern. Again, immigration, how will that take place? What impact will it have on the market? That's to be determined. But this is the amazing chart that I want to really share with you. We do see that for Ontario, that there's going to be anywhere between 20 to 30% decline of home sales this year, and we're already seeing a lot more than that. But if you see the chart for 2021, it kind of rebounds right back to maybe 50 to 60% increase in year-over-year sales activity, and that's primarily due to pent-up demand. There was a lot of pent-up demand coming up to COVID, and that's been suppressed artificially to some extent by this crisis, but I think that's going to again take off right after. This is again a very interesting chart here. On the right-hand side, you can see that for Q3, which is basically the period of July to September, TD does expect prices in Ontario to begin to rise back up slowly. Obviously for Q2, which is April, May, June, that's a complete write-off, obviously for the right reasons. But Q3, which is July, August, September, they anticipate markets to kind of pick up and move forward. And again, falling supply, a lot of homes are not hitting the market right now. There's, again, no homes being listed, well, very few homes being listed, very few buyers on the market, and that's kind of led to prices stabilizing, but I do think that's going to begin to ease up as we move forward. So what's important to remember is, again, this is an event-based lockdown, which will, I think, begin to open up. I'm a glass half full kind of guy. Even though I'm in real estate, I try to keep it as unbiased as possible. And I'm not particularly worried about what the impact of this will be in the next 6 to 9 months. Of course, we're going to have a huge downturn in the economy, but I also know that we are quite resilient, and we will pick it right back up and start moving towards the right direction. So just wanted to share this with you guys. That's all. And do take care in the meanwhile. If you have any comments, more than happy to hear them and address them. Take care.